Retail investors aren't just along for the ride anymore. They're driving market leadership. And the Retail Kings ETF shows us exactly where the money is going with a focus on momentum and participation. Joining us to break it down is Sylvia Jablonski, Chief Investment Officer at Defiance ETF. Sylvia, great to have you here at the desk.
Thank you so much for having me. Happy to be here.
All right, so Defiance just recently launched Retail Kings in partnership with Futurum.
Yes.
I think it's important, let's be clear right out of the gate, this is not a meme ETF, this is not Reddit pumps, but what is a Retail King?
Yeah, a Retail King is, you and I were talking a little bit off camera about this, but there's so much interest by the retail community now in trading and investing. And in some ways, the retail community has become the smart money of the world, right? And institutions are trying to follow what they're doing. And so these are the stocks that retail are talking about. These are the conversations that they're having. But also we should define retail. For us, in this case, retail is that $68 trillion of wealth transfer is the generation it's going to. That's retail, right? It's kind of like millennium, Gen X, millennium, Gen Z and beyond, right? That will inherit some of this wealth transfer. And they are actively stock picking and following the trends of tomorrow. And so what Retail Kings does is we look at companies that have IP. They have some special technological secret sauce. They're talked about by their competitors. The hyperscalers are interested in what they're doing. They're sniffing them out for M&A or research. And they're essentially that fourth industrial revolution. It's that next generation in energy and tech and space and pharmaceuticals, you name it. It's companies that you might not be as familiar with.
Okay, and we'll get to some of those companies in terms of where the money's flowing. But first, I do want to ask you, because you use something called retail sentiment intelligence.
Yes.
So you're essentially listening to the internet, social listening. How do you separate real long-term conviction from some of these crypto scams that we've been seeing, from bots, from just a lot of social media noise?
That's a great question, and that's where Futurum actually comes in, right? So Futurum Partners is who powers the intel and the research behind this ETF, and they are analysts of these stocks, right? So they are actively looking at all of these companies, going to the meetings, learning about what they do, following their IP, following their tech developments, and they actually provide the secret sauce or the scoring of the universe of stocks. And then we look at things like price trends, momentum, retail sentiment, and essentially where the puck is going in some of these stocks. So there is a good amount of analysis behind this.
Okay, so let's talk about where the money is flowing.
Okay.
The portfolio, I don't think a surprise to anyone, is tech heavy.
Yes.
But not Mag 7, so there's some Mag 7 fatigue there.
Yeah, I mean, it could have Mag 7 one day, but right now it doesn't, because we're looking at, again, that fourth industrial revolution, the tech of tomorrow. So a lot of times these are the smaller to mid-cap names within the space. But they're certainly in partnerships with Mag 7. But yeah, you have names in there like AST, Rocket Labs, Robinhood is in holding, MP Energy, Oklo, quantum computing types of stocks. And it's really meant to, again, represent the disruptors in every sector.
We've seen this brutal sell-off in software.
Yes.
Of course, I'm curious, is the retail crowd buying that dip, or are they losing patience there?
I think they bought that dip, right? I think, first of all, I think it was overdone. I think if you look at the AI story and how it's growing and how it's melding out, software is very likely to be a big component of that, and unlikely to be completely replaced with the innovations of AI in the coming years. And also the companies that were punished are companies that are leading in things like AI and quantum computing, in the technology of tomorrow. So these companies that are being punished for their software aspect are also doing many other things. But yes, I mean, you can kind of see how the market recovered over the last couple of days. It's very much the retail came in and bought on the dip, I think.
I'm curious what your personal view is on some of those oversold software names. What would you be buying on the dip?
I am very much a believer that the future is AI, like a lot of other retail investors. And so everything that has to do with the AI infrastructure, whether it's the energy behind it, whether it's the wireless, the connectivity behind it, whether it's AI for space or AI for modern warfare, I think that's the story. And a lot of the big players that sold off are actually leaders in this space.
But what separates the winners from the losers? Because we know after the dot-com bust, there was only one Amazon, only one Google, and a bunch of
Yeah.
other names that failed. So,
Well,
how
I
do
think
you
so. It's
about
really
that?
interesting because the difference between now and the dot-com bust is revenue. There is revenue, right? These companies are very profitable. They have quality balance sheets, at least if we're talking about the max, the Mag 7, the hyperscalers, things like this. And then the smaller names, I mean, they're going, what's going to separate them is also revenues, right? So for now, you have quantum computing is a great example. You have these quantum computing companies like IonQ, Rigetti that are part of the frontier and transformation of quantum computing, and they're on the verge of being profitable, right? But for now, it's a lot of R&D, and they are part of what we're seeing as commercialization of quantum computing. And so I think if it comes to fruition and you start seeing that revenue hit, then they're here for the long run. If you start seeing the little players that continue to kind of operate without any revenue, I think that kind of tips you off in terms of like where to allocate.
Okay, going back to where the retail money is flowing. Energy Fuels, ticker symbol U. Why uranium and why now?
Yeah, it's again AI.
Yeah.
It's right. It's the word of the day. So I think if we think about AI, I think that the global AI TAM, total addressable market right now, is something like 390 billion. It's thought to be 2.5 to 3 trillion. Those are the estimates that I see out there by 2030. That's 4 years away. That's a big leap, right? And so what has to happen in order for that to actually come to fruition? It needs to be powered. You need energy, you need fuels, you need, alternative assets to essentially cool, power, build out the databases and things like this, the data warehouses, machine learning. And so I think a lot of these companies are now participating in ways that haven't been thought of before. Even companies that we're well aware of, like GE Vernova, I mean, they're playing a huge role, right? Quanta Services, they're playing a huge role because of the AI infrastructure build out.
A different way to play AI, Lemonade.
Yes.
Symbol LMND,
Yes.
AI insurance. So
Yeah.
not necessarily a pick or a shovel or, but a beneficiary of AI.
A beneficiary of AI. And this is also, and like Rocket Mortgage is another one, similar type of vein, right? It's a way that they're going to optimize their business models. They're going to better calculate the risk that they take on, the client profile that they take on. They're going to better target the client that they actually get and have an easier conversion and sale. And I think that, again, we're talking about that next generation. We are very much online. We are very much more comfortable with these high tech or more tech ways of dealing rather than calling someone at an insurance company or at a bank. And I think that these companies will benefit from that.
When you take a step back and look at where the retail dollars are actually flowing,
Yes.
what does that tell you about positioning for 2026 from the retail investor?
Right. And so I think it's important to distinguish that, right, the retail investor from maybe institutional flows. Because on one side, you hear a lot of, diversify your portfolio. Perhaps some of this has run up, the multiples are high, and institutions are giving us feedback in different ways. Like they're more of an XMAG allocation, right? But the retail community, I mean, the flows that we see are, very much going in quantum computing. That's been our biggest growing space at our firm anyway. AI power and infrastructure is another one. Again, defense, but AI for defense, modern warfare, things like this. So again, I think it's the AI trade and its family, its cousins, its siblings, and and ETFs like that.
What's an example of a company that retail investors are loving, but Wall Street isn't touching, or vice versa?
Yeah, I mean, I'm just trying to think of ones that they're not touching because the retail community now has such a big voice that it ends up getting touched. But I would say that the retail community is very invested in the drone companies, for example, and maybe institutions are starting to catch up on some of those. There's, certainly like the Rocket Labs, the AST, the future idea of SpaceX and things like this. I think that there's a lot of enthusiasm on the retail side for that, and institutions are starting to catch up on that.
Retail money used to be called dumb money. Is
Yeah.
it actually smarter now, or is it just faster, I guess?
It's taking up a big part of the market, and I think it's also a wealth transition. It's a generational transition. There are statistics out there, for example, that over the last decade, millennials and younger have allocated less than 50% of their funds essentially to equities, right? They would just go into their 401k plan and pick whatever mutual fund was available to them. That number has now grown to 72% of millennials and beyond are allocating to equities. So you have, millennials are entering they're in their 40s, early 40s, mid 40s. They're in their money making years, and what are they buying? They're buying equities. And then beyond that, the bug has been caught by Gen Z, and you have groups of individuals who are now investing prior to the age of 18 at a higher rate than ever before, right? And again, that's 68 trillion of wealth. Like if you think about that, if that goes mainly towards equities, it becomes a large part of the market. And is it smart money or dumb? It depends, I think, on investor habits. We'll have to see what the retail community does. I think the buy and hold dollar cost averaging thing, whether it's in a mutual fund or an ETF, is wise, but we'll have to see how they trade.
Do you have a gauge on what sentiment is like right now, though? Because it is helping to move this market. It's many times it's actually leading the market.
Yes.
What does the retail investor, or how do they feel right now?
So if you look at the surveys, it's tough to break them out because they're institutional types of surveys, right? So broad-based investor sentiment is improving slightly. It had been kind of stable to the negative side over the last couple of years, and we're starting to see some improvement in that retail sentiment. But if you look at the retail sentiment on places like X and Reddit and social media communities and podcasts and the young influencers, there is so much excitement about the market, and there's so much excitement about the future of tech and the fourth industrial revolution. It's incredibly high levels of enthusiasm from that community.
And just quickly, one thing that we didn't touch upon, although with holdings like Robinhood, it is linked, but it's crypto.
Yes.
Do you have a lot of exposure to crypto in your Retail Kings ETF? And what is sentiment like around there, given the fact that we've seen Bitcoin fall so far from its highs?
Yeah, so it could be that stocks related to crypto end up in the ETF if they pass the momentum scoring system and things like this. So we're not kind of actively saying we should buy Bitcoin or something like this. It has to pop up on the model. But I do think that there's some trepidation, hesitation around what we're seeing in Bitcoin. I think that most of the market has expected a little bit more of a bounce at this point. The fact that we're under that 70,000 level and in the high 60,000 range, I think is concerning to some market participants. So I think that if you start to see us breaking past that 70 and then that 72.5 and 75,000, you'll get investors back in. But it depends on who you speak to, right? If you talk to a Michael Saylor or a Tom Lee, I mean, they're just continuing to buy this up and buy on the dip, right? And that is certainly moving the space. But I think what happened was there was a little bit of a risk-off sentiment. People went towards gold. It seemed safer and it was performing. And now we'll see where it goes.
How often are you making changes to your portfolio?
For that particular ETF, it's a quarterly rebalance.
Quarterly.
Yes.
Okay.
Yes.
All right.
Yes.
We're wrapping up there, but before we let you go, we want to do our rapid fire game of this or that. You've played with us before.
Yes,
are you ready to play again?
Yes, very stressful.
All right, here we go. Tech pullback. Buy the dip or wait it out?
Buy the dip.
Mag 7 or the rest of the market?
Oh. Can I qualify my answer?
Sure.
I'm going to say XMAG only because everyone has Mag 7. So I'm not saying to abandon it. I just think you already have it.
Just hold it. Software sell-off, real threat or buy the dip?
Buy the dip.
Best software dip to buy?
Oh, goodness. I think some of the Mag 7, like the Microsofts maybe.
AI chips or AI agents?
AI chips.
Data centers or cloud software?
Can I say both?
Okay, we'll give you one both.
Yes.
AMD or Intel?
AMD.
What's a stock that looks scary now but will be worth your money to buy?
Oh, goodness. Again, I would say a lot of the space companies, the space tech, just because they're new.
What's one that seems expensive now but will ultimately be a good value?
Seems expensive. I'm going to give the obvious answer. I just think that everything is about AI and it just doesn't exist without NVIDIA. So although it's at its all-time highs, it's the obvious answer. I do think that it has a permanent place in an AI portfolio.
Okay. Off of that, what's one hidden gem pick?
Hidden gem pick. I'm going to say, I mean, I don't know if it's so hidden, but I think the AI power infrastructure, I think like an AIPO or a single stock in there could be a Quanta.
Okay. The most misunderstood stock in your Retail Kings portfolio right now?
Oh, misunderstood. Probably Quantum. And mainly because a lot of people just haven't caught up to what it is.
Yes, we just don't understand it.
Yes.
Is retail money smarter or just faster right now?
I think Sometimes it's smarter. It's certainly faster.
Space or defense?
Ooh, they go hand in hand. You can't have one without the other. So I think space will change defense. So we'll go with space for the high growth.
Nuclear or solar?
Nuclear.
Energy transition or energy security?
Another tough one, I will say transition.
Copper or lithium?
Copper.
Uranium or rare earths?
Absolutely need them both. Let's go with rare earth.
What is one tech company currently hiding in plain sight that will be a household name by 2027?
Household name, let's see. I don't know if it's hiding in plain sight, but I think like a D-Wave or an IonQ, just because I do think that the quantum transition is going to materialize in the next couple of years, and those companies will continue to grow.
All right, we'll leave it there. Not too stressful.
Thank you.
Sylvia Jablonski, always appreciate you joining us. Thanks so much.
So much for having me.
That's Sylvia Jablonski, Chief Investment Officer at Defiance ETFs.